Hey, strategic wealth preservation investors, it's Chris Vermeulen from the technicaltraders.com. And today I want to cover the quarterly report on the big view of the stock market, precious metals, the dollar, and Bitcoin, and what all those things are saying and what the charts are pointing to. Now, if you didn't catch Mark in our last conversation, you can scroll to the bottom of their website and you can come in here and check out this post-election presentation we did. We talked about the markets, lots of good feedback and questions there from Mark and the team. So make sure you go and check out that as well. Now let's jump right into the charts. Now I want to give the big view here of the monthly charts for all of these. Keep it short and simple, but let you to get an idea of where we are in the grand scheme of things. Now in the last quarterly report I shared, which you could probably look up on their website, we talked about stage 3 analysis. I believe we're into a major topping phase. In fact, the type of scenario we're entering right now over the last several months is very similar to the scenario we had unfolding over here. When you lift the hood to the markets and look at the internals, the same thing is starting to unfold. So I believe we're going to go back into another little bear market. It could also be something a whole lot bigger, which I'll show you in just a moment. So how do we go about identifying and getting an idea where these market highs and lows are? Well, we're going to take a look at the recent low during COVID. This is a standout low, and we're going to use Fibonacci extension, which is one of my favorite tools to identify upside targets. It can also tell us where pullbacks and support levels will be and downside targets for downtrends. So we're going to take the low up to the high and then take this 2022 low and going to carry that forward. And there are two price levels, two value levels on the Fibonacci that are really the only two I think you need to know. That is the 618 extension and the 100% extension. And what this does is this tells us the momentum of the rally and the strength of the pullback. By knowing those two things, we can project forward where we should find resistance levels. Now the 618 is the first level. This is where you can do partial profit taking or move your stops up. Again, this works on any asset class, any time frame. That's the nice thing about Fibonacci. And we do, when we have a pause here, we almost always go up and hit this 100% level, which we have done in the SP 500. So I think we are very close to the market top. Maybe we're going to have one more little squeeze higher, but overall, I think most of the upside of this bull market run is coming to an end, especially the fact that the market internals are weakening and falling apart. That is another sign that we need to be aware there. Now, if we were to take a look and figure out where the downside potential for this market could be, we can use a Fibonacci retracement, which says, okay, well, based on this last leg up, we can do a few different levels. This is the most conservative one, saying, okay, the market should fall into this sweet window, which is a 38% retracement down to the 50%. So this is that range we'd be looking for it to pull back if this market has topped. And of course, from where we are right about now, that is somewhere between a 12 to about 18% pullback. Now, of this whole leg, things could get a whole lot bigger. We could see it actually pull back a lot deeper down into this range, about 22 to 30%, which would be a much deeper correction, something similar to what we saw in 2022. Now, to go back even further to look at the whole bull market, bear market cycle, the whole super cycles at play, we would actually go all the way back to where this 2008, 2009 low was drawn. And that gives us a projection of where this market could unwind to if it comes down. That's roughly about a 31 or so percent all the way down to about a 42 and potentially 53% correction in the market. So there's a lot of downside potential. And this type of selling, when we get into this type of bear market, that is when we see pretty much all asset classes move down, other than the odd one like the dollar. Keep in mind when they had the 2008 high, the market pulled back roughly about 50+% to the downside. So this pullback of a 38% all the way to 61% is not that out of the norm. In fact, if we even go back further here, take a look at the previous bear market, we saw the market pull back again, pretty much 50%. and had a big sell-off. So there's a lot of potential downside. Not saying it's going to happen, but we need to be aware that there is a very good likelihood that it will happen. And the important thing to note is when it does eventually happen, it's just a matter of time. We do need to be aware gold will sell off and pull back. So let's go and take a look at gold now, because it's pretty important here to get the big picture of gold. The monthly chart definitely shows clarity in terms of where we are. If we were to take the long-term super cycle in gold when it put in a major low back over here in early 2000, and then we have the run up to the high in 2011, and then we come down to this low in 2015 and carry that forward, you can see we have seen gold pull back, or it's rallied up. It's consolidated here at the 618. It had a multi-year pause and now is broken through, and it's hit this 100% measured move. And now we're starting to see sellers step in. This is a very similar move. A multi-year pause here, and then the whole world piles into precious metals and gold more so for that last run, as everybody's worried about real estate bubble. We've got currency issues, we've got wars, we've got bubbles in stock markets. It's very similar to what we saw over here, where the stock market went into a multi-year pause, and then suddenly out of nowhere it took off, and everybody did the same thing. We had real estate bubbles, equity bubbles, all kinds of stuff happening. And that's where we are right now, is this measured move. Gold has mostly had its upside for the time being, and I'm expecting we're gonna have some type of pullback with the bear market, and gold could pull back over the next little while. We talked about this, Mark Yaxley and I, in the last presentation or talk that we had about a couple of months ago. So that's kind of where we stand in terms of the big picture for gold. Now, silver's the same. Silver will pull back. These are going to move together. It's all the same trade. Precious metals are kind of pretty much in the same boat. As the tide goes up, they tend to go up together, and they also go down together. Silver just moves more on a percentage standpoint. So what's exciting, and Mark and I talked about, was eventually we're going to get into a major low where we have a multi-year run. And that's what we're going to be waiting for, hopefully this year. It will set up for that prime opportunity for a big rally to the upside. Now, just to show, we look at this long-term picture. This is like a 22-year kind of cycle that we're going through here, a measured move. If we were to just kind of clear all of this and just zoom in on the closer time frame, it's important to realize that this most recent low that we had in 2015 and the first rally up here to this high in 2020, and then we come down to this low and carry that forward, you can see this much shorter time frame also tops out at this level. So we've got two totally different patterns, two completely different time frames and cycles, both telling us that gold has kind of hit that move. Now, short term, I do think gold over the next 1 to 2 or even 3 months, this quarter, gold could work its way back up and test these highs, maybe poke a little bit higher. So there is some upside, but I do expect sometime by the end of this year, probably gold to pull back fairly substantially. It'll be an opportunity, kind of that major low, and I think a lot will be falling apart probably in the economy and the stock market and things like that. And then eventually we're going to have this huge buying opportunity for gold, silver, and other metals as well. Platinum and palladium, I think, will do well. So now let's jump over to the dollar real quick. Actually, you know what? Let's go to Bitcoin, because Bitcoin has got a very interesting chart, similar in the way of these measured moves. Now, recently we got in, we did a Bitcoin trade about a month and a half ago. We got into Bitcoin right over here, and we're going to show you the reason we did that is because we're seeing it as a major bull flag pattern. So it's got this run up, it's got a bull flag pattern. It also, you could argue here, as a cup and handle pattern. These are very, very strong bullish patterns. And the monthly chart with Bitcoin is a herd mentality play. I have not traded Bitcoin in over a decade. This was the first trade, and the only reason I did it is because the chart pattern was set up and it was pointing to higher pricing. So if we were to just clear this chart and look at Fibonacci, and the reason I'll bring this up because this relates to the stock market and precious metals here. If we take a look at the Fibonacci move, we have this rally up and then we come down to this low and carry it forward. You can see that we had the 618 level, And this is where we had our first target. We pulled some profits off and we got out here at 107.8, right near the high. And then since then, we've seen Bitcoin start to sell off in a big way. In fact, if we take a look at the daily chart of Bitcoin, you can see here, let me just zoom out. You can see here we had an entry point. We hit our first exit, kind of paused for a few bars, and then ended up running higher and hitting that target. And now, as soon as we hit that target, we've seen big selling, huge volume, and people are unloading Bitcoin. And I bring this up because Bitcoin is somewhat, we've got the stock market, we've got gold, and we've got Bitcoin all hitting 100% measured moves. If we take a look at this chart of the NASDAQ, a lot of people say that Bitcoin moves, to its own, on its own. But here we have the NASDAQ to the upside, and the bottom is the Bitcoin chart. Again, it's the weekly chart for both. And this line across here, this wiggly line, is a correlation line. Now, the white line is 0. When the correlation line is above 0, which it almost always is, it's telling us that the stock market has a correlation, has a positive correlation to the stock market. So when when the stock market is moving up, Bitcoin is generally moving up. When we have like a big run in price, we tend to see Bitcoin have a big run in price. When the stock market goes down, we tend to see Bitcoin go down. When the stock market goes up, Bitcoin goes up. So they're very related. In fact, if we zoom in a little bit here, you can see we had a big red bar in the NASDAQ, and we had a big red bar. Whoops, let me just get rid of that. We had a big red bar in the NASDAQ, and we had a big red bar in Bitcoin. And then, of course, we're having another big red bar here, and Bitcoin is doing the same. So they do move similar. They're not completely disconnected like a lot of people think they are. And so there's a lot of key asset classes here hitting major monthly targets. So kind of going back to just physical gold, I am a huge believer in physical gold. I own a lot of gold and silver. And, I think that a lot of people aren't going to like to hear this, but to me, precious metals is the ultimate safe haven. I don't see Bitcoin or crypto as a safe haven. And, there's a few reasons for that. First of all, I'm not big into the crypto space because it just seems very easy for things to get stolen. I recently met somebody in Florida that had like 3 or 6 of their Bitcoins stolen and gone, and they were like completely devastated. We hear about this all the time, people getting scammed and losing money and exchanges being hacked. We don't really hear people breaking into vaults and stealing everybody's gold and silver. The other thing is, and this is the biggest one to me, is simply when the stock market, well, there's actually 2 here. When the stock market goes down, I believe Bitcoin is going to crash. So it's not a safe haven from that regard. I think Bitcoin will fall percentage-wise much, much more than gold. Gold will most likely pull back, but it'll be more conservative. So it holds value better, gold, than crypto. But the biggest thing here is we had the internet go down in Canada. There's only like 5 major internet providers. The biggest one went down. Almost everybody had no internet. And that kind of brings us back to the medieval days. So I went into town to try and find a cafe to do my morning video for clients. And I had to find somebody with a different internet connection. Finally found a cafe, and this fund manager happened to know me. I didn't know who they were at the time. He said, "Chris, I got to talk to you." He goes, "You wouldn't believe what happened." So we sat down and we talked, and he's talking about, he ended up showing me some silver rounds. And he goes, "I just filled my car up with 2 silver rounds at the gas station." He says, "The internet was down, couldn't use credit card, couldn't use your phone." And he keeps some silver rounds in his glove compartment in case something ever happens, and he was able to use it. So the big thing here for me is what happens when the internet goes down? What happens if power goes out? If there's a huge EMP, an electronic magnetic pulse during some war, no electronics work, crypto is essentially useless. Whereas you can have gold, you can have small denominations, and you can have silver, and you can still get around and barter. And pretty much the only currencies, I think, when everything hits the fan is going to be physical metals if there's no power, and probably weapons to convince people to give you what you want. So that's unfortunately how the world works when all kind of hell goes loose. So I like physical metals, and I think we're coming into an amazing opportunity this year that it's going to be one of the last years probably to accumulate metals before we see a multi-year rally and see gold and silver dramatically higher, probably doubling or tripling in price over the next several years. So anyways, that's my outlook for the quarterly report, and hopefully you found some insight here. Take care. Bye-bye.